Dividend investors, bonjour! Mike Giroux here, founder of Dividend Stocks and passionate investor. Welcome to this first video of the year where we're going to talk about Brookfield Property Partners. I made a couple of videos about this company earlier in 2020. Basically, full disclaimer, I used to own shares. I bought Brookfield back in late May of 2020 as a speculative play, made some good money, sold it later on in October, and now a lot of investors are telling me, well, Mike, you should have waited a little bit because Brookfield Asset Management, the parent company, is offering to buy back all the units available at a premium of like roughly 15%. So basically they are offering to buy it back at $16.50 US dollar for each unit. We're going to get into the offer later on this video, what you should do about it. And on my side, I made a good profit on it and actually moved that money from Brookfield Property Partner to CAE and made another great profit over there. So I don't feel too bad, but if you own shares of Brookfield Property Partners today, I think that you want to watch this entire video where we're going to cover the business model to see exactly what you hold in your portfolio right now and what is the offer, what are the implications, and what should you do with your units. First, let's get a look at Brookfield property tickers. You have three tickers, so basically two in the US. So either you invest in a limited partnership, so be considerate of all tax implication, or you just bought some corporate class shares, BPYU, which works basically as a regular company. If you're Canadian, you hold it as a trust unit, BPY.UN.TO. The three tickers offer roughly a yield close to 8%. The dividend growth has been initiated in 2015. Every single year they increase their dividend, but if the company will remain public in 2021 for the entire year, which is not likely to happen, but let's assume that, I'm not expecting any increase this year anyway. It has been rough for the business. It has been rough for shareholders that have been holding BPY for a while, and the reason is most of their assets are in retail or office properties. So let's take a deeper look at their portfolio. We are talking about a huge giant, over 200 billions in assets over properties. Most of it is concentrated in the US, but you can still have 35 billion in Europe and Middle East, another 20 billion in Asia. So you have a business that manages like the best location ever in pretty much all the big cities in the world. How this money is invested? Well, it's pretty much half offices, half retail, and then you have like 15% in multifamily and other projects. What they do is they're trying to build some kind of like small centers where you have people going to work there and then shopping and hopefully living not too far away. The whole idea here is all about location. You know, when you have a great REIT, it is often because the company owns the best street corner in the city, and this is exactly what they do. If you look a little bit deeper into their offices and retail, you'll see that 94% of their top 15 complex is occupied. Average lease is 10 years, so very easy to predict cash flow in those cases. Strong investment. They have focus on the top buildings in many cities, and you have similar thing for the retail. So 122 properties, and the bulk of the value is concentrated in the top 25, 96% occupied. And what is really interesting here is on top of, in my previous videos, I've already discussed that Brookfield Property Partners has access to a lot of liquidity. They have cash on hands. Their parent company, Brookfield Asset Management, has access to 42 billions in either cash on hands. From the top of my head, it was like around 13 billions in cash, and then the rest available in a line of credits. And when you look at BPY, they have a lot of equity on their business, on their properties. Just a side note on that. This is determined by the asset value that they're giving. So maybe but you can rest assured that Brookfield Property Partners can still remortgage a lot of their properties and use that capital to do more renovation, more acquisition, to grow their business, or maybe pay dividend, which is not necessarily the best thing, right? In terms of location in the US, keep in mind out of their 200 billions of assets, they have 135 in the US. And keep in mind that 64 of population of the US, so 2/3 of US consumers are located within 1 hour drive of a BPY center. In other words, they're telling you, you know what? We own the best buildings. People go there to work, they go there to shop, and we should go through this entire pandemic lockdown without any stress, which pretty much what happened when you look at companies like Ryokan. Remember that I did a video on them, told them that I didn't like them too much, and then they ended up cutting down their dividend towards the end of 2020. For Brookfield Property Partners, they haven't cut their dividend in 2020, and they're not likely to do it because Brookfield Asset Management intends to purchase all the units. Now let's look at the offer because it's kind of tricky. You have 3 choices as a BPY shareholder. So the first one is you could receive $16.50 US dollar for each BPY unit. So if you're Canadian, it's really pretty much 21 bucks, considering the currency fluctuation. Obviously, this changed all the time, but it was a premium of about 15% on the previous price. On the date of the announcement, which was January 4th, BPY shares jumped by that like 16-17%. So now it's trading higher than BAM offers. The other 2 choices is that you could shift your shares, trade your shares for 0.4 shares of BAM units. So Brookfield Asset Management is also available. In this case, you're talking about one company that you used to have is a REIT focused on retail and offices, and then you're getting shares of a multi-billion asset management firm which has those retail and office properties, but they also manage Brookfield infrastructure and then renewable energy. So they have like a bunch of other assets. So it's really more to consider as a financial services stock class. And the third option is to trade your unit to get preferred shares of Brookfield Property Partner. The company has no intention of buying those back. So if you're all about fixed income and receiving a nice yield, you could trade those. The yield on the preferred shares is lower than what actually the units are offering right now. We're talking about like 5.75, 6%. So it's a bit lower, but still you get something quite interesting if you're looking for a reliable source of income. So what's the thesis behind it? Why in the world BAM would like to close the capital on this one, take it off from the public market and keep working on it? Well, the thing is, Brookfield Management think that the worst is behind them, that the overall trend towards urbanization and those kind of centers that they're building is going to continue going forward. So they're basically saying it's just a speed bump, and in a few years it will just look like a blip, and we believe in our business model. And for that reason, since the shares have been depleted in value since the beginning of 2020, it's a great opportunity for them to buy back those shares at a cheap price. The other thing that they're saying is, as the economy is reopening and recovering, basically online sales only represent now 25% of total all retail sales, and it was 22 a year ago. So they're just saying, you know what, it's a trend, it's there to stay, but it's not like most of the sales are still being made in store. I'd like to put one thought into it is, if this trend was already growing and it grew by double digit in terms of improvement, so from 22 to 25%, we're talking about like 14% increase in a single year. Those kind of trends, habits from consumers are not going to stop. And I see that as a strong signal that you might not want to put too much into retail REITs, and maybe you want to look into some tech stocks that will enable online shopping a better experience for consumers. One last thing to consider from this presentation is it was made during fall of 2020, and as I'm doing this video in early January, we see lots of lockdowns in Europe. I know that I live in Quebec. They're about to announce full lockdown on Wednesday, January 6th for 3-4 weeks. I know that there's a lot of other lockdowns in the US. So I think winter is going to be very long, and even though the retail industry has been hyped on the vaccine news and everybody thought it was all unicorns and rainbows, it's not going to happen this way. It's going to take some time, and it's going to be a long, hard winter, and some people will not survive that winter. I'm not saying that BPY will not survive. I think they're going to survive and it's going to do well because the location is all about it, and they are sitting on so much cash. But I'm just not too bullish on the overall retail brick and mortar industry. The real reason why Brookfield Asset Management wants to pay you $16 per share is because they value their units as nearly $27. So it's a huge deal for them. Keep in mind, they already offered to buy back for $900 million, so almost $1 billion throughout the summer of 2020. They were offering something like $12. So it was a huge deal for them. They ended up just buying half of what they wanted. Most shareholders decided to keep their shares and the juicy dividend that comes with it. That was pretty much what I was telling you in my previous videos. And if by this time you're still watching this video, just give me a thumbs up telling me that you like this video. Subscribe to my channel. This helps me to grow. This helps me to get more viewers and to help more investors invest with conviction. Okay, so now back to Brookfield Asset Management. The overall analyst consensus is around $20 a unit in terms of value. So even at $20, they're making a very good deal. So this is pretty much the reason why they're doing that right now. By closing capital, they will gain flexibility. They will be able to do whatever they want within their business without having the market going crazy all the time. And if they're generating more money, they're generating more yield, it's all going to be in their pocket. So when you're BAM right now and you're looking at your portfolio and you already own a good chunk of Brookfield Property Partners, you're thinking, you know what? I think I'm going to buy all of it for 17, maybe $18, because I'm going to tell you, I expect a higher bid on this one. This probably is what is going to happen in the coming weeks or quarters if it's not big enough. And when you look at the market, this is exactly what happens. Now the BPY shares are trading higher than the offer. But even at $20, it would be a very good deal for them to buy it and then close capital. And on top of that, they have the cash for it. So now this leaves you with pretty much 4 options. Option number 1, you sell now, you cash your profit, hopefully if you bought it recently, and then you just move on. This strategy is not that bad because you're sure that whatever happens next, because you never know when there's offers like this, sometimes it goes sideways, there's no more offer on the table, something else changes in the way, like imagine a huge lockdown for 2 months in the US, the assets value will drop down, some retailers are going to go bankrupt, and all of those things should affect the deal, and maybe Brookfield will say, you know what, it's not worth it anymore, and then the deal falls off, and then shareholders lose a lot of money. On the other side, it could be also a higher offer that is coming up. So by selling right now, you clear out the doubts and then you just move on. So that could be an interesting option. If you're thinking about getting BAM shares, I will just say, look at your portfolio first. Make sure that you're not over invested in financial services, because it's more about portfolio management at this point than it is about if BAM is a good investment or not. Look at that, and then you can look at BAM overall picture. They're not offering a high yield, so you're losing that if this is the reason why you bought Brookfield Property in the first place. If you're looking for yield, you might want to go for preferred shares. Then you're going to get your income and you get some stability. And as you can see in my previous videos, I expect the balance sheet from Brookfield Property Partners. Sorry, it's hard to say. Their balance sheet is solid. They're sitting on a lot of cash. BAM is there to back them up, so I don't expect them to go sideways. So if you're going for income, this could be a good way to do it. Please do your own due diligence on that. Preferred shares may not be as liquid as other type of investments, so this is just like a small warning. But if you're comfortable with preferred shares, this could be a good idea. And finally, the last option that you can use is you can just wait. You can just wait, cash your dividend, because you're still getting an 8% dividend, probably yield on cost. If you bought it before that, it's probably like double digit, so it's quite appealing. And then you can just wait to see what happens. The downside, as I mentioned earlier, is if the deal goes sideways, shares could plummet again and you could get hurt. But if not, it is likely going to happen that they're going to have a higher bid. I'm saying that because the market sent a strong signal on the day that that BAM announced that they will purchase all the units. The units went up over $17. So they're telling you, you better offer a better deal, because if not, it's not going to happen. People are not going to sell at $16.50 when they can hold it at 17 or 17 baht fixed fee, right? What is important is that at this point, there are no decision to be made. There are no deadlines or anything like that. So you can look on their company's investor website. In the press release, they're just lining up the three options. So basically, getting cash for your units, trading them for BAM shares, or trading them for preferred shares. The three have the same premium. It's pretty much 15% of what it used to be. Now it's actually lower, so expect a higher bid. Overall, I don't own shares of BPY, so I don't mind what's going to happen next. I already made my peace with my transaction. It was good. I treat it as a speculative play. I hope that this video will give you enough information to make the right decision for your case, taking all consideration on this one. And one last thing before I go, I am hosting a free webinar about how to invest in 2021. The live event will happen on January 7th, 1 p.m. If you cannot make it live, or if you're watching this video and you're late, don't worry. If you register through the link below in the link description, you will get access to the full replay right away. I expect to have it roughly like 1 hour long presentation. We're covering all sectors. We're discussing a buying strategy, and we're talking about what should you do if you have money on the sideline in this crazy market. If you're waiting for an opportunity, I have like a game plan that I'm offering you, how you can invest. And I'll stay around for roughly 1 hour of an Ask Me Anything. So this is probably the best part of the webinar. People are asking me questions. I'm answering them live. If you are interested in that, link below, register the webinar. Even if you're late, you'll get the free replay right away. And until next video, stay invested.